and we're going to ask the critical question, what's next? Huge question, critical. We're certainly not going to cover all the answers in this podcast, but we're going to give a shot on the topic of financing net zero, a rough guide of what is needed coming up. So before we do that, I'd like to thank our three speakers who have joined us today, and to kickstart the conversation with their opinion of the top news stories, which are shown on your screen right now. First up, we have Dr. Roland Kupe, the economist for energy and climate policy at the German Economic Institute. Hi, Roland, and welcome. And which story would you choose, please?
Hi, so I'm very excited to be here today, and this year marks really a substantial shift in international climate policy. We have seen a new leadership, especially from the US, and I'm really excited to see a strong increase in climate policies and also in renewable energy policies.
Excellent. And from that story, the list of stories, you've got 10 there on the screen at the moment, showing you starting off with Irina. Which would you say is the most relevant to you? Which one really jumps out of you as that's one we have to focus on?
Well, I think the obvious one is the renewable energy capacity. This is really, well, a brilliant figure, this growth. And I think this is just going to be a starting point for this decade, but also the second point with the World Bank revising its climate policy. So I think the capacity additions and the policies shifting the investments and making the investments more attractive, that is, well, those two headlines are the most interesting to me from this list.
And perhaps a cynic 5 or 6 years ago, 10 years ago would have said, oh, you know, that 10%, that's from a very, very low base. It's so low, it's not really representative of a figure we should be that impressed by. But that's no longer the case. That is an impressive figure, and the base is always increasing, and the market is growing so much that is certainly something that should justifiably be raising eyebrows and giving us a little bit of reassurance. Next up is Jess Rutter, the Managing Director of JRP Solutions. Hi, Jess. What catches your eye, please?
Hi. The thing that catches my eye is the one on green energy tariffs, because they most unquestionably are misleading. There shouldn't be a question mark after that. There needs to be a system put in place to ensure there's no double counting. In fact, it's something we're looking at the moment, putting a paper out with our own opinion. So yeah, it's fascinating that, you know, green energy tariffs have been around for a long time, and yet it's taking this amount of time for really that there needs to be a robust process behind the mechanisms.
Do you think that the momentum is there now to make changes? And this is part of a broader conversation as well about concerns over greenwashing. We've seen some major energy companies coming under a very unpleasant spotlight recently as well. And in terms of the ETS as well, it's had its own complaints about double counting over the years when it comes to the credits. Do you feel like now is the time very much to change this narrative? Do you think the momentum is there?
Yeah, it's got to change, because yes, indeed. I mean, it's got to change because whilst ever there is all of the double counting and different levels of certification behind the actual data, no one's got confidence. People don't know that they're paying this little bit extra and where the actual end resource is actually coming from and whether it truly is renewable. Obviously, there's some areas that are stronger, like, you know, solar and wind, and others that are much weaker, like biomass. You know, is that truly should that contribute to a green tariff?
This is something I do want to pick up on during the bulk of the conversation about financing net zero, because you touched on the C word there, confidence, and that level of transparency and accountability, and how that feeds into the confidence needed to make these viable. So I definitely want to touch back on that. But last but certainly not least, we have Rajiv Mahajan, Head of Project Finance, Private Sector Facility at the Green Climate Fund. Which one would you choose?
Thank you, Michelle, and good to be back here today. So I think there are two things that I would pick on from the list that you have. A pretty comprehensive list, and the first one that I would pick on is China on green bonds. And I think getting the markets in to finance climate investments is going to be the way forward. I don't think we could rely on public sources of financing anymore. to meet net zero targets, and that's something that we are realizing as we go on. It's not only China, but it's other parts of the world that are also seeing a revolution in green bonds. And just this morning there was a news of a tier 2 Indian municipality that raised green bonds for water supply, which is excellent, and that's the way I would imagine the world would transition towards going forward. Look, there's a whole lot of savings out there that need to be tapped for climate, and this is what the bonds could do. The other thing that I would pick on is what Roland touched upon is the 10% growth in renewable energy capacity coming through in 2020 was a great achievement, and that happened despite COVID. There were apprehensions that this revolution is going to slow down. It didn't happen. Rather,
as it did with the last financial crisis.
Correct, absolutely. Accelerated a bit, I would say.
Indeed, right. That's quite an optimistic start to this podcast. That's fantastic. Now let's delve into the main topic of the day, which is financing net zero, of which all those stories tie into. Just to give a bit of background to the listeners, globally, more than 2,000 companies of all sizes have joined the UNFCCC's Race to Zero, with around a third of these coming from the UK. In approximately a year, we've seen a collection of the world's biggest economies step up and commit to net zero targets, including China and the US, which Roland's already touched upon as well, the US being more of a tightrope result with the election, and now that very much seems to be paying off. Again, very good news. With the upcoming UNFCCC Climate Summit in Glasgow, hopefully COVID permitting, there's going to be a real full stop on what needs to be done for these targets. There's going to need to be a show of accountability. There's going to need to be a show of the devil's in the details. Yes, you made fantastic progress by announcing these targets, and we can't deny that's a huge step forward, but now what? And what are the roadmaps? What needs to be done? There is still a very long way to go, a long way to go. Now, this may be with roadmaps for firm regulatory and policy architecture, might be R&D, talent enhancement, finance, innovations that need to be better commercialized. That's a huge issue as well. And the list goes on. So it is a big conversation. We're going to try and tackle as much of it as we can in this very short amount of time. I'd just like to start with you, Rajiv, about from a finance point of view. So from the UN said that it's needed around $300 billion per year for climate adaptation. Yet international finance flows for such adaptation and resilience are estimated around 30 billion a year. Now, we're all seeing these big headlines coming out with these extremely impressive numbers. How is that translating into progress on the ground? Is it going fast enough to help us achieve these net zero targets?
I don't think so. I mean, that's a challenge, and the problem that we face typically as financiers is not enough pipeline of projects coming through in adaptation, and the reason for that is simple. They're not enough viable business models that exist in the adaptation space, and I think the first and foremost thing that a private sector investor or any investor would look at before investing in adaptation is there a business model? And that's where money has to come in from the private sector. Look, there are the World Banks of the world or the green climate funds of the world that could catalyze some of these investments. And I think there's a lot of work to be done at developing scalable business models in adaptation that would make good sense for the private sector to invest in them, and we could come in and finance some of those. And I guess there's quite a bit to be done over there, and I would say it's a blue ocean over there, so you could do quite a bit. But the consciousness is growing, and that's a good part, and everyone is talking about it now. And the governments are also realizing that this is where the action has to be. So,
and that cultural change takes time, doesn't it? That cultural change isn't just that.
Yes, it does. And in many countries, you've got this whole thing about, paying for infrastructure, for instance. I mean, that's a concept which is not there. And so how do you develop a business model? So I think governments are now waking up to that idea. And once they do, things could change. I'd like to point out that entities like the World Bank and ourselves could support some of these developments on the ground in terms of evolution of business models and support to the countries to help develop some of these ideas. And that's where we could play a catalytic role. We are doing that. And we are also trying to push the envelope by looking at, let's say, some adaptation benefits coming through from mitigation projects, and forcing our clients to think about that. And it's a tough thing. It's not easy, but we made a start on that.
And of course, you know, the comment there, as you say, we're willing to invest, we're willing to support and so on, but you need the funnels to be correct into which you invest. And it can't be a one-sided situation. And the whole ecosystem, the whole chain needs to be strengthened in order for your investments to make sense as well. Roland, what's your point of view from a European perspective? Obviously, in this space, Europe is charging ahead.
So, well, in Europe, we're quite busy with the European Green Deal and all the policy instruments which are going to be designed and presented by approximately June this year. So, for example, the European carbon market needs to be revised, and we need to get regulations, for example, in the transport sector and the heating sector, where we currently don't have covering carbon price or European carbon price. So this is keeping us busy here. And I'm expecting a substantial shift also in the European emissions trading system, so for the energy sector and the industry sector. And well, in the EU, we could learn from the new speed, which is shown in the UK ETS. I think that, well, yeah, but the cap needs to be adjusted to the new target. And I think this is going to make a drastic change. And we're currently seeing carbon prices rising already in expectation of tougher targets. And I'm really excited what is going to happen. I mean, we have all these investment needs. There are certain technologies, especially in the industry sector, everything that is going around green hydrogen, for example, and other forms of power to X. We have a pricing gap there. So the carbon price is not high enough, and the technology is not as mature as renewable energy technologies, for example. So I'm quite excited what is going to happen in these sectors, which are complementary to renewable energy technologies themselves.
Indeed. And just before I just want to ask you about energy efficiency, and also bring back what you were saying about, bring up a survey question in a second, and then I'll come on to you, Jess. But to ask about energy efficiency and pricing is being touched upon quite a bit here, and how critical that is to this overall picture and the ability to verify it accurately. So if we could bring up the first survey question, I think I know the answer to this before we go, but let's see. Do you think that the trend will continue where we've seen global renewable energy capacity rise by the 10.3% in 2020? Do you think that this very positive upward trend is going to continue post-pandemic? Agree or disagree? I suspect we only need to keep that on for a few seconds. It's a very easy question to answer. You probably have quite a gut feel about it all as soon as you see it. Irene, if we have enough answers, can we show them, please? Wow, okay, that's very optimistic. Brilliant, thank you for that, Irene, as well. Right, so the optimistic tune continues, which is great. Jess, do you, obviously you do agree with that answer because it was 100%, but do you think that there needs to be a note of caution in this? And as you were touching upon, and you know, the misleading elements in this is to do with the tariffs. Rose just touched upon the carbon price is still not high enough. That must change. And the carbon pricing is still very much in buckets. It's not on a much more broad level, which is what people are being aspiring for. Where do you sit on this? Do you think that it's cautious optimism? Are you there, Jeff?
I think there should be huge optimism that, yes, can you hear me?
Yes, yes.
There should be huge optimism that renewables will increase. But I'd like to come from another angle, actually.
Please.
As you introduced it, it was about sort of energy efficiency is vital as part of it. But energy efficiency is broken down really into two elements. One is technical type projects, and the other is behavioral or people related projects. And the people element is largely ignored globally. It's absolutely incredible, in fact. I'm, as well as managing director of JRP Solutions, I'm also the founder and lead for about 3 years ago on the Energy Institute and Esther, not-for-profit. In fact, lots of time been put in for nothing, because we feel so passionately that there's a missing cog to net zero, which is behavior change. And I mean that in the industrial, the commercial, the public sector, all of those fields. The opportunity for energy efficiency for technology is only about 50% of the potential energy efficiency improvement. The other 50% is people, but it gets no investment. It's largely ignored. We're trying really hard to actually make it become more notable, and we've got techniques and approaches behind it, and actually we're training a lot of people at the moment in how, energy experts, but they don't have behavior change experience. This is a huge gap that must be addressed and needs investment. It's not just technology.
Rajiv, what's your point of view on that in terms of the appeal or the viability of investing in this behavioural change? Like Jess said, it's a critical, 50% is a critical part of the overall picture. What's your take on it?
I absolutely agree with Jess on that. And the problem is even more acute when it comes to, let's say, the large industries, where some of these investments could be hugely process disruptive. And the boards cannot take that call. It's too difficult for them to take that call. And therefore there has to be, let's say, some financial incentive that is given to them to make that investment decision. And that's not an easy thing to do. It's extremely difficult. I had worked on one such investment idea in the recent past, last year, where we were trying to do an industrial energy efficiency investment program in 7 countries in Eastern Europe and Central Asia. And we put in a unique approach, which said that our funding is going to be concessional, but it's only going to be concessional if the investment decision is taken and is successfully implemented. So that, it's easy for the management to sell that idea to the board that, look, if we are going to do this, we are going to get concessional support. If we implement it, we're going to get concessional support. And the concessions are going to be increased further if they're going to be developing a green roadmap to proceed on with further investments, which is a bit unique.
Are there any examples that you or Jess can point to where this is being managed effectively, where positive change is happening, and perhaps can be a template for others? Do any spring to mind for either of you?
I think so. I just
if you said no, we've just hit our first negative moment. Sorry, Rajiv, carry on.
Yeah, no. So I was.
Sorry,
I interrupted. I interrupted Jess. But yeah, so I'd spoken about one example, and it's going to be implemented later this year in those 7 economies, and we've got to see what happens. I think we are trying a new thing out in the market. It's a new product, and we hope it works. We hope that's going to be interesting enough for some of the corporates to take that investment decision, which is extremely tough. Some of these industries are vintage 1950s, 1960s, and not much investment has gone into those industries thereafter. So you can imagine what damage they're doing to the environment at this point.
Well, I think it's something the Financial Times' Lex said it's up to $900 billion of risk in stranded assets if governments continue to aggressively target those net zero goals. So that there is that big issue of needing to update, and lots of the existing infrastructure can be reused and can be leveraged effectively. Jess, just on to what you were saying, please.
Yes, so So this initiative is energy conscious organization. We use that because people don't like the phrase behavior change because they don't like their behavior being changed naturally. So there's a website called energyconsciousorganisation.co.uk. As I said, it's a not-for-profit. We're just trying to change the world. We're investing a lot of time for nothing. And we're trying to make it the hub for all behavior change related projects. So there are great examples and case studies on there. There are not enough, but there are case studies on there, like Aston University, Heathrow Airport, Vanderland, Ibstock Brick. And in fact, we've just approved the very first registered ENCO organization, which is Rolls-Royce. So there's case studies on there where savings have actually been proven using measurement and verification.
Excellent. Roland, what's your take on this from your perspective? Are you seeing enough of a focus on behavioral change in the work that you're doing?
Not really. Well, energy efficiency is always included in instruments and policies and also in discussions, but it's never really a big focus. So focus is often on technology and investment and energy efficiency. Well, as you said, when it's technology related, people are on it. Okay, yes. Energy improvements are always good, but behavioral change or the way we use energy services, this is really a difficult thing actually to address in the first place. So from an academic view, there's often things about like nudging and soft policies and soft instruments to address behavioral changes and information policies, but they often under-deliver, or the impact is often overrated when governments announce them or implement them. When they are actually evaluated, we see rather low impact, but there is still a huge gap actually, and the academics show us each year in new publication that there is still potential in so many applications, transport and buildings, for example, and I hope smart technologies could improve that, but I don't see a strong push in this direction.
Do you think it's like Jez says, it's that fear factor? People don't like the idea of having to change their, in many parts of the world, we're very privileged, and we have, the habits that we have, and we enjoy energy security, and we enjoy our habits of turning on the tap or having a long shower, or billions of people do have this sort of luxury. Do you think that there's and that's just on the residential side of things, we're also talking about the industry as well. Do you think there is a big element here of fear? I don't want to change. I'm already willing to talk about EVs. I'm already willing to talk about changing my light bulb. Just stop now. You're not changing anymore. Do you think there's that element is still very strong? I would hope not over the last couple of years, but perhaps it's stronger than we realize. What do you think, Roland?
Could I answer that?
Yes.
I thought it was addressed to Jez anyways. Yeah, so.
Yes, Jez, please.
Well, with behavior change projects, it can either be done properly, or quite often it's not done properly. There's a method and a process to actually doing it properly. We've defined it. There are over 140 different types of behavior change intervention, and people are somewhat surprised when they only perhaps do 10 of these, why they can't measure it. And the reason they can't measure it is because it's not done on a holistic enough basis that you can actually subsequently measure it. So the approach that's defined is vital to it, but we've got great case studies of sort of 10% site savings and 25% site savings. So we know that it can happen. What we need is more examples and more investment into it. And then there'll be people crying out in a few years' time, hopefully saying, well, why aren't we doing this? Because it works. Saying that,
really there is appetite. Sorry, Jez, your screen keeps freezing a little bit. So when I'm not I start talking when I think you finished. Rajiv is saying that there is this appetite building. What if you had to pin it down to one thing that's putting investors off, like we're saying, needs more investment? What would be that one thing that you would drill it down to that needs to change?
Sorry, is that for me?
I think it's
That's
ignorance.
Yes.
People are not aware. I think ignorance is the problem. There's just not enough, which is a problem for everybody. There isn't enough awareness of the potential and therefore the need to invest into it.
Do you think that poster change such as EVs has just taken too much attention away from some of the lower hanging fruits that can be done? Or do you think that that's just as important? People's capacity for this conversation needs to increase.
It does need to increase, and there needs to be investment. A bit like Rajiv says, there should be money put aside to incentivize people to do this type of project, because the potential is huge, and we'll never get to net zero if we don't engage people. And it'll have other spin-off benefits. You know, it's the optimization of the technology as well as, you know, say switching things off, the obvious things. So yes, it needs investment in essence and realization.
We have two more survey questions. One I've just added just because I'd be really keen to hear all your thoughts on this. Again, I think I might know the answer, but I'll ask each of you in turn, and the choices are yes, no, and maybe. And just a yes, no, or maybe from each of you would be great, please. So the question is, will financing net zero fail without significant behavioral changes? So we can chuck all the money in the world at this, but if it's not being changed on the other end of the seesaw, it's just going to fail. So the question is, will financing net zero fail without significant behavioral changes? Jess? Yes. Jess, your answer?
Yes, it will fail.
Roland?
Well, depending on what you describe as behavioral change, but of course it needs to be complemented by
quite significant, like Jess is talking about, a big shift in the way we see things. So shall I put you down for a yes or a maybe?
Yeah, yes, in a certain way, sure, of course.
Okay, I'll put you down with an S with an asterisk. How's that? Rajiv, what about you?
Yes, indeed. And I think there are two factors. One is availability of financing, and the second is technology transfer, which would be critical for some of the developing economies.
Okay, excellent. And this is very interesting because we've had a podcast roughly on this subject before over the last year, and that focus was zooming in very strongly on technology. And when we did bring up behavioral change, it was glossed over. So that's why this is very fascinating for us as well, because in the last 8 months, it's shifting so strongly. And of course, Jess, having you on as well, and your expertise is really helping with that. Right, on to our last survey question, which will be popping up now. It's a very simple question. Is the global flow of capital moving fast enough to hit net zero targets? Rajiv started this by saying no at the beginning of the session, so we already know his answer. But those who are also attending can vote as well. It's a very quick yes, no answer. Can we look at the answers in a second, please, Irene? So at the moment, one of the figures I was talking about, those headline grabbing figures, is that there's $29 trillion of climate-related investment potential across 21 emerging markets, according to the IFC, representing 48% of global emissions. Again, another very impressive figure, but what does it actually mean? So if we can show the answers, please, Irene, that would be great. Okay, all right, so not as negative as perhaps we thought, but still on the more concerning side. Roland, how confident do you feel for the rest of this decade with this conversation? Do you feel that momentum will shift enough that we will start fully being on track to finance net zero effectively?
Yes, I'm very optimistic, simply because I don't see a linear trend anymore. I think the last decade, the 10 years, and there have been incremental shifts. But now I think things are just falling over each day and week, and we're seeing new targets, new instruments, and new financing routes. And I think bring this shift in the finance sector now. If this trend continues and is going to extrapolate, I'm very optimistic. Yes.
Rajiv, do you agree with that?
Well, the current pace, I don't think so, but I think there is a huge potential to accelerate that pace, and it can be done. I think it's the question of having the right policies and the right mechanisms to do it. get in pension fund money, get the markets to contribute, and green bonds are a good example. So yes, achievable, but we need to do a lot more in terms of getting those investments to the table.
And thank you, Rajiv. And your final thoughts, Jess? What would you summarize for that for the rest of the decade? How optimistic should we be?
I would agree with what Rajiv said. I don't think we're there yet, but I think the appetite is increasing. So hopefully it will be there, but there's so much work to do still.
Brilliant. Well, I think we ended on a tentatively optimistic note. Thank you very much for joining us. And
thank you.
Thank you, all three of you, very much. I think we could be chatting on this for another 4 or 5 hours if we had the time. So thank you very much. And the insights from this will be harvested into an intelligence briefing, which will be available next week, and it'll be available publicly, which we'll follow up with. So thank you very, very much.
Thanks, Michelle. Thank you all.